Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now. Good morning, traders. Happy Monday. Welcome back. As you all know, when I miss a week, I miss you guys so much. So welcome back to the Trader Bacon Show. I'm your host, Gates Adams. We've got a few pretty cool announcements for today. The first one is that my lovely wife has joined the chat for the very first time ever since the inception of the Trader Bacon Show. So please show the Feral Muse a little love. While not necessarily a trader yet, I would like to think that she is a fan, as a matter of fact. Anyway, what an exciting show. We just had a week off because of Memorial Day. And since we last had a Trader Bacon Show, we had a phenomenal milestone achieved. As you guys know, I have been counting this down for the last several weeks. But since we last came on board, Apex Trader Funding has reached the milestone of paying out over $500 million. That's $500 million in the pockets of traders as of this moment. So I just want to do a special congratulations to Apex for everything that they have done in creating this opportunity for traders to really, to me, the biggest opportunity as a trader is time. For most traders, having that opportunity gives them, I talk to traders literally every day. That's my job. And what I hear over and over and over again is it took me 2 years, 3 years, 5 years, sometimes 10 years. And for most people, that is just not a reasonable option if they're having to trade their own money. So while, of course, Apex is not the only game in town, they are the only game in town that has paid out $500 million. So anyway, I wanted to take a moment and share that with you guys. Most of you probably already know, you've been hearing me jabber about this for the past several weeks. But again, super, super excited. As you guys know, I finally managed to get my small share of that. So I did get several payouts. I unfortunately blew the accounts that I had. I've been working on 5 more PAs for the last few days, and as of this morning, got 5 more. So I'm up to 10 PAs after I activate them this evening. As I continue on my journey, which I love sharing with you guys as well, because I know it mirrors a lot of what you guys are doing as well. So thanks so much for just sharing in this journey with me. It means so much to me. As we get started on this day, I've got another countdown, and I actually have to get the actual date of it. I can't remember what it is, but we are actually approaching the 100th episode of the Trader Bacon Show, another milestone that I am super proud of and super excited to be able to share with you guys also. So stick around and continue to join us for that. I don't know if we'll have the opportunity to do something special for that episode, but I will see if I can get something in the works for that. But today we've got an amazing show for you guys. Now, as I've built this show and as I've built the Forge Trader podcast, which, by the way, I'm hoping to have a new episode this week. I've been traveling last week, so I didn't have an episode, and I hate skipping 2 weeks. So I still need to put a few things together to get that out. Crossing my fingers, hopefully you get a chance to do that. And if you want more information, go to the forgetrader.com/join, and you'll get updates on everything Forge Trader as well. So hang out for that. As we continue to develop the show and everything that we're talking about, I've had the opportunity to talk to so many traders. And one thing that I always heard very consistently was I'm an ICT trader. And so when I really started getting serious about finding my strategy, I looked to ICT. Now, I am by no means an ICT purist. I consider myself sort of ICT adjacent. But we continue to get guests on the show that have a foundation in their trading based in ICT, and we're going to talk a little bit more about that today. First and foremost, of course, I want to remind you guys, we are giving away 3 evaluations today. Make sure to fill out the forms that are right there in the chat, and you'll have a chance at winning one of those. And of course, congratulations to last week's winners. We have Steve, Elizabeth, and William. So congratulations to you guys. Not last week, 2 weeks ago. But we will be giving away 3 more evaluations today, and that's those on next week's show. All of that said, looking forward to a phenomenal show today with my buddy Amish, who's going to join us on today's episode of the Trader Bacon Show.
How are you, Gates? Thanks for having me.
Oh, fantastic, man. I'm such a pleasure to have you on here today. As you and I talked about before we started the show, and as we were talking about the show, I don't do a whole lot of preparation on strategy and everything like that, but
Right.
I know that you are sort of in the realm of ICT. So I'm really looking forward to talking a little further about what that looks like. And we'll get into all of that here in just a few minutes. But really, first and foremost, thanks for taking some time and hanging out with us today. Always a pleasure to see new traders on the show, man. How's it going?
Absolutely. Yeah, I feel blessed and lucky to be here. I know you're growing and scaling and killing it. And I feel very lucky to be a part of Apex and their $500 million milestone. So I'm feeling great, man. New week, month, first trading day of the month. Been a good year so far, and hoping to provide some value today.
Let's keep it going, man. So let's talk a little bit about the journey, man. How long have you been actually trading at this point?
So full-time day trading, I just passed 3 years. So April 19th of 2022 is when I sat down and I said, okay, let me devote my time and make a career out of this. The year prior in 2021, I was swing trading a little bit. There's some luck involved there. I mean, there was crypto, there was some stocks, there was options, but I didn't become a day trader until 2022.
Got it. What pushed you down that road? So you say full-time day trader, meaning this is what you do for a living now, right?
Correct. Yeah, this is my primary source of income. Yeah.
So how long did it take you to, well, first and foremost, from that point, 2022, how long did it take you to get to a point where you had a level of consistency where that was a realistic option for you? Quit your job, fire your boss, whatever verbiage you like to say.
I always knew that was the goal, and I had full intent to make a living out of day trading, but it took me two solid years of no payouts, no return on investment. In 2022, I began trading options, and that was a mistake I wish I bypassed. Like, thousands and thousands of dollars lost. And, options, that market in general, it is it's not friendly to buyers, right? Because you have theta decay. So long story short, I spent most of 2022 trading options, strategy hopping, always looking for the next best course, paying people for one-on-ones. I mean, today I was reviewing a notebook that I've kind of just documented my journey and so many strategy hopping things and inefficient learning, right? It wasn't until about November of 2022 that I discovered ICT. And like you said, Gates, I'm not an ICT purist, but I do utilize some of his concepts, and I really think there is valid knowledge, especially in the 2022 series. So I had started with a strategy called the STRAT, S-T-R-A-T, and that is just price action fundamentals. If you see my charts behind me, I do not have any indicators on. I don't really use any sort of indicators or volume, but there was no consistency in the strat, right? There's no repeatable process that you can really maximize, whereas ICT is fractal, just like we were talking about. You can use it on the 1 minute as a scalper, you can use it on the daily as a swing trader, and that's what drew me toward it.
Right.
Now, I don't know if you've watched the 2022 series. I think you have.
No,
Okay.
I don't. I'm not sure I even got through the first video. Look, as much as I love the concept, I've learned the concept through a dozen other people.
Yeah.
In no disrespect to ICT, he's created an amazing following, and he's brought a lot of concepts that did pre-exist him, but really brought them to the forefront and created a lot of very successful traders. So I have a lot of respect. I just can't sit through an hour and a half video with 5 minutes of content.
I know.
That's always a struggle for me, and I know a lot of people feel the same way. But that doesn't change the fact that what he's done has absolutely been marvelous for the industry. But
Right.
2022, of course, seems to be the gold standard, I guess, at this point in the world of ICT.
Yeah, absolutely. I think it covers everything you need to know, and that was my introduction to futures and eventually Apex.
Right.
Futures, you get the benefit of leverage just like you do with options, but you don't have the uncontrolled variables, right? You don't have theta decay to worry about. You don't have delta. You don't have gamma.
Right.
So I spent the latter end of 2022 focused on ICT. I rewatched, all 40 episodes of 2022 and took a bunch of notes and listened to all the rants. And say what you want about ICT, he's made people money, and that's what matters.
Yeah, 100%.
The liquidity concepts, stuff like that really resonated with me. And then in January of 23, I bought my first eval. And, since early 2023, I've been trading with Apex. Took me well over 6 months, about 8 months to get my first PA account, right? tons of close calls, right? Close to passing evaluations, but,
Right.
you know, dealing with the emotions of you know, live P&L, it's a learning process. And then in 2023, I officially became funded. Didn't get my first payout till 24 though. I will say that.
I was going to say, you and I were on a similar trajectory. I started trading the beginning of 23 with my first eval. I did pass a set of evals about 6 months later, but it took me a little over 2 years to get that first payout. So that was where I sort of got held up. But that process involved a lot of self-discovery, which I think has not only changed my trading, but changed my life. And I know we've talked a little bit about this as well. So I want to take a quick step back because you talked about some of the other courses that you took along the way. And I know I've done that. I'm sure pretty much everybody in the chat has done that. And while we talk about strategy on the show, I'm always very careful to talk about strategy because I don't want to necessarily encourage the habit of strategy hopping. But the reality is when we first get started, we have to strategy hop. We have to figure out what resonates with us. And we were talking before the show, and I was talking about the fact that one of the things that really resonates with me from really the concepts of ICT is really where those liquidity pools are and chasing that liquidity, right? That resonates with me. That's the reason that I continued down that road and stopped my hopping strategy, I guess. But you took a lot of courses along the way. Did you find value in them that you still are able to utilize, or did you really scrap everything that you learned and you focused in on really what you've built out of ICT?
Yeah, that's a good question. You know, I think everything happens for a reason. I don't think it was necessarily wasted time. But what stuck with me more than anything was the fact that two people can have different perspectives on the market and both could be right and wrong in their respective ways, right? There's a million ways to make $1 million trading.
Right.
It's really about finding what resonates with your personality, going through that personal growth and sticking with something once you find some traction.
Right.
There's a balance between figuring out what works and what doesn't, and then just going too far and not sticking with anything. Right. ICT for me is what stuck, and that's where I devoted my time to. But I don't think it was a waste to strategy hop. I think everyone has to go through it, and eventually you find something that works. And in general, the consensus is that ICT is liquidity concepts. You know, whether or not you disagree or agree about the algorithm and the secrets of the market, right? Who knows? But when it comes to price action, it works, and that's why I stuck with it.
Well, and I think to me, take the algo sort of conspiracy theory out of the mix. Logically speaking, these liquidity pools make sense, and I think that was ultimately what resonated with me. But let's quit messing around here. Let's dig into the charts and let's look at what it is that you have developed out of your experience with ICT that's brought you to this level of consistency and growth as a trader.
Sure, absolutely. Okay, so yeah, like you said, the liquidity concepts make sense. ICT's narrative is that efficiency is the name of the game. Right. And that makes sense, right? There's buy stops, there's sell stops. The market wants to absorb liquidity and keep it moving. So when I come into the market, I'm starting at higher time frames, right? So the monthly, the weekly, the daily, things like the 4-hour, the 15-minute, all very useful for me. You see all these up here now, but I am a scalper. I'll start with saying that. I take entries and exits on the 1 minute and 30 second. However, you know, I avoid being too zoomed in, right? I think it's good to zoom out and know where you are in the market, understand bias and seasonality and different things, just having that higher time frame awareness. So that's where I'll start. Every week, every day, I in my personal journal, which is crucial. I think everyone needs to journal. I create a bias, right? So I'm looking at the monthly. So if we look at May, based on ICT stuff, right? We had this fair value gap that was formed earlier this year. So this is from March. Right. May's monthly candle, we closed above that, right? So that's an inversion of this fair value gap. And you know, we have all-time highs here. So this looks bullish to me. That's my June narrative.
Right.
Now, there's a great website called equityclock.com. They have seasonality charts for just about every asset. They have NQ futures as well. And you can kind of see what the market does each month. Going on to like the weekly and the daily, I apply the same perspective. right? What fair value gaps are holding? Where is price? And I'm sure some people think, fair value gaps can't just be magic. You can't just say fair value gaps run everything. And that's true. They don't. But it's about what they represent, right? And something people need to understand is that a fair value gap is an area in which price moved relatively quick, right? If you're on the daily chart, so this fair value gap, for example, the only time price was in this level, so about 21,000 to 21,230 was on this day, right? In this moment of time. So that is a fair value gap in the sense that everyone who maybe wanted to sell or buy in that time frame didn't get the opportunity to do so. Therefore, price has a reason to gravitate back down and either respect it, right? Which it did for a while here and then close below, or inverse it. So that's why I place so much importance on fair value gaps. I don't really care about order blocks. I don't care about breakers. I don't care about the million other concepts.
Right.
Fair value gaps work for me, and that's why I stick with them. So I see all those things on the higher time frames, the weekly, the daily, again, the 4 hour and the 1 hour. And above fair value gaps, when it comes to what I'm looking at, what I'm marking out, is liquidity. Where are buy stops? Where are sell stops? Right? Where does the market want to move toward? So coming into today, what I saw immediately on the 4 hour was we had these relative highs here. So we had this fresh 4 hour fair value gap, and then we had Friday's high here, and then the 4 hour fair value gap there. So that was my draw on liquidity, right? When I created my bias last night, I wanted to see Friday's high get either swept or ran through. So far, we've swept it and kind of came back down. But, my logic there is previous day high, right? And a fresh 4 hour fair value gap. Those act as my draw on liquidity. And that's number one for me, whether it's bias or it's entries and exits. Draw on liquidity is number one. Where does price want to move toward? Where will the most activity happen in terms of buyers and sellers? So we got that today, right? At the open, like we were talking about, we had that huge run up. I know you made some good money there.
Right.
Yeah, beautiful. I mean, this is 8:30 Central open straight up. My charts are in Eastern, by the way. So we immediately ran up. We took out previous day high, which I'll mark out here. This is sort of my main view. I have the 15-minute, as ICT calls the bellwether time frame. Then I have the 5 and the 1 minute. But this line here, this is previous day high. So we run up, we gravitate toward it, and then we get a reaction. Now, this is where my strategy comes into play, right? Everything I've just talked about, that's all analysis, and that's great. But how am I making money off of this?
Right.
My strategy at its core is IFVGs, so inversion fair value gaps, closing below or above a recently created fair value gap.
Right.
What that represents to me is, we retraced toward that fair value gap, and we sort of just eradicated it, right? It's no longer valid, and that represents a narrative shift. If we have a bullish fair value gap, like we did here on the 1 minute, and this was my one trade today. So we get this bullish fair value gap created just after sweeping this high, which is Friday's high, tapping once again using the higher time frames, tapping this fresh 4 hour imbalance. We get a close below this 1 minute fair value gap. I was short somewhere in this area, around 425, right when we closed below. I put on a short position. I was targeting these lows, and why that is because if you see here, bottom left on the 5 minute, we had a fresh fair value gap. So liquidity, fair value gaps, you see how they're intermingled into my strategy. And I know I've been talking for a while, so Gates, if you have any questions.
You're good. No. Keep going.
Yeah. So we had this fresh 5 minute, right? This was created on that beautiful run up this morning. And this was my magnet to the downside, right? Why price should go lower. Let's at least get a reaction there in the 5 minute.
Right.
So that's my draw. That's my target. That's number one. Second, I even have it written here: draw, delivery, and entry. Right. So the delivery in this case is the 1 minute inversion, and the entry is at that close.
Right.
And then we also had the 4 hour as bearish delivery to the downside, right?
Right.
So push and pull. You know, what's pushing us down is that 4 hour imbalance. What's pulling us down is that 5 minute fair value gap. That's the essence of my strategy. So I'm short here. My stop was just above halfway. So as ICT calls CE of this inversion.
That's quite encroachment. Love the verbiage.
You know, some of these words, I wonder if they're just made up, but
I'm pretty sure they are.
Yeah, just letting price retrace if it needs to, right?
Mm-hmm.
Anyone can make money trading. It's hard to keep it. And
Sure.
What our protection in the market is stop losses.
Right.
And the art of stop placement. I mean, that's a whole art in itself to master. My thought process is always, how can my position be protected? What PD arrays, so what fair value gaps, what order blocks can I use to defend my position?
Right.
In this case, we had this freshly formed, well, this wasn't formed yet, but we had this freshly formed 1 minute. So my stop allowed price to tap right back into it if it wanted to. And then, you know, I was in the position, we're moving down, we're going towards my TP, which was this low. Swing lows and swing highs is what I generally target on the 1 minute. If I'm not going to break even there, I'm targeting that.
Right.
And again, this was just above the 5 minute fair value gap. You know, we drew down here and then came just above my entry. Right here is where I let the 1 minute protect my position, like I'm saying. If we zoom in a little bit, you see how the bodies are respecting this fair value gap.
Right.
Minimize this one. This tells me that this is a bearish narrative, right? Mm-hmm. Bearish PD arrays are being respected. Price is likely to push down, right? I have so many confluences. And then once we had come back below my entry, I was back in profit. I trailed my stop just a little bit to this candle's high. And as you can see, a beautiful dump right into my take profit. So got about 24 points on that. I'm generally using 1 mini. If I'm in a 50K, I'm using 2 minis and a 150. That is big size. And that's where risk management really comes into play.
Well, and of course, a lot of that has to do with the size of the move that you're expecting, and the size of the stop loss. You know, at the end of the day, like I might enter a position like this, and my stop loss would be above the swing high, which means I've got to take a much smaller position. But I also will be targeting something lower. I usually try to shoot for like a 2-to-1, 3-to-1 risk reward ratio. It doesn't always happen, but it doesn't look like that's necessarily as much of a consideration for you based on what you're looking at. You just want that, what, you know, in my world, and, you know, some of the people that I talk to would call that low hanging fruit, where some of us would say, okay, I'm going to trim my position here. You're taking your position there, right?
Correct. Yep,
so
exactly.
You just put in and out.
Yeah, and we were just talking about this. I mean, it's figuring out what works best for your personality, your psychology, and what's sustainable.
Sure.
And 24 points, if I'm being honest with you, that's big for me. You know, some of my trades are 10, 12, 15 points, and that's great.
Right.
But it adds up, right? Apex gives you the ability to copy trade and trade multiple PA accounts. And if you're doing that, you know, in this trade, for example, $440 in one account, you can duplicate that on 5, 10, 20 PAs. And that's serious money. Going back to what you were saying about risk to reward, that's something you kind of have to figure out for yourself.
Right.
Understand the win rate in your strategy, right? If you have a 60% win rate, where does your risk to reward need to be to maintain long-term profitability, right? Over 100 trades, what is your EV? What's your expected value? Right. You know, if someone has a 40% win rate, they would want higher risk reward. If they have a 30%, right? They're going to be going for 2, 3-to-1, 4-to-1, so on and so forth. With my strategy personally, if I'm sticking to A+ setups, and A+ for me is just that higher time frame confluence, lower time frame precision. I can get a 70, higher than 70% win rate when I'm focusing on quality.
Sure.
That being said, I tend to have a lower risk to reward. 1.43 or whatever it was at the start of this trade is more than enough for me.
That's beautiful on 70%. I mean, that's.
And it's not. This is kind of a perfect trade. It just so happened to be like that today. Some trades are 0.8, 0.9 risk to reward, right? But again, I'm everything I do is based on price action, right? I don't want to just go with a fixed 1-to-1 risk to reward. That every setup is unique and it requires its unique stop. I'll have different PD arrays on a different setup that may require a tighter or a wider stop.
Sure.
And that's how I go.
And especially in the early days, I think every trader wants that perfectly mechanical strategy, which I don't think exists. I mean, there are some strategies that are reasonably mechanical. They may eke out a profit. They may be better than the average trader, but I don't think that they're the high level, consistently profitable trade for a living trader type strategies. That discretionary, or at least whether not necessarily discretionary, but utilizing that price action to determine where your stops are, where your targets are, and managing that and having sort of a range of what you're willing to accept to make it a viable trade for you is a big part of that learning process. And of course, that's, as we talked about, it's going to be different for everybody, right?
Absolutely.
So you have to figure out what works for you. I'd love a 70% win ratio. I don't have one. My risk to reward ratio is what saves me.
Exactly.
I mean, that's my edge, right?
Yep.
And there is logic behind where those entries are. So if I see a trade, but I get a 1.2 risk reward ratio, to me, that's not a viable trade. I'm not going to take it. Sure. As long as I'm behaving. I always have to give that caveat because, still in the process.
Exactly. And that's really what it is, right? We are our own biggest threat.
Of course.
Once you do the strategy hopping, once you master your edge, the only variable, is human emotion. You 100%. Are your biggest threat, right? We were just talking about this. I mean, I've had a great year thus far. I'm blessed to say that, but there's still those days where your emotions just kick in, and that 100%. Is what skews your win rate. It skews your probability, and what traders really need to focus on eliminating.
Right.
You and I, we trade differently, but we're both profitable, and that comes from a strong psychological fortitude, right? Like you need to have that strength. No one's perfect, right? We're not AI algorithms. We can't just stick to that mechanical system, but minimizing how much your emotions get involved and spreading them out, right? If you, let's say in the beginning of your journey, you were tilting once a week, once a month. Well, now if you can, stay disciplined for 3 months, great, that's progress, right? And zooming out and having that long-term view and doing what you can, doing what you can when you can.
Yeah, some might call that the process of being forged. I don't know. A little shameless self-promotion, never hurt
there
anybody.
You go. Absolutely.
That really is what that concept means to me. That's why I utilize that moniker. It is because it is. It's a long process. It's a process that takes a lot of. You have to go through a beating really in order to develop that, and it's just part of the process. Nobody gets out of it, and if you can make it through that, that's what ultimately puts you on the other side. Now, speaking of being on the other side, okay, look, Amish, you are now trading for a living. This is where a lot of people want to be. This is, I talk to a lot of traders who are making 5 figures a month, but they're still not in the mindset that they can trade for a living, that this can be their primary source of income, or in fact, their only source of income. For you, what did it take to get you over that particular psychological hump?
So I'll say number one, everyone has their own beliefs. Mine is faith above all, right? And then after that just comes with self-discipline. And, if you set out your mind to do something, you need to be willing to go through what it takes, right? Everyone has their threshold. I'll quit my job or I'll become full-time when I'm at this number, whatever it might be. Trading is very scalable. So what you can do in one account, you can do in multiple accounts with bigger size and all that. But what I think it really is enduring the ups and downs, right? Never quitting. This is a journey of self-discovery, of self-growth. And I mean, there was countless hours I put in and never saw a return on my money. I was showing up every day to essentially lose money and just getting that experience in. Once the market closed, I was back testing. On the weekends, I was just listening to trading audiobooks or learning more where I could. And that's really what it takes. I mean, a lot of people are interested in doing what we do and becoming full-time traders, but they're not committed to it. And that's what breaks them.
For sure.
There's high highs and there can be very low lows. I mean, you make the money, you can lose it. And for a long time, if you truly want to be profitable, you will not see a tangible return, right? You'll see progress, which is great, but the external results come from a long, hard, but potentially worth it process.
Yeah.
And I think just sticking to that, and you can't give up. Giving up cannot be an option in your mind.
So, and I wholeheartedly agree with you. There has to be a level of commitment to the end game.
Right.
But that end game with trading is it's a moving target.
Yeah.
Like once you achieve a certain milestone, it's okay. Well, what's the next one? Because if you're not growing, you start to stagnate, and that's just not good in the mindset of a trader. So
Absolutely.
for you, I'm just curious, and we'll do this real quick because I'm already over. But for you, what does it look like on the other side? I mean, are you like a 90-minute a day work schedule and you go play all day? I mean, what does life look like now for you as a full-time trader?
Yeah, I think people glorify that lifestyle. They see all the social media posts of people driving their Lambos and whatnot. The amount of time in the day that I'm actually executing positions might be minuscule. It might be an hour. It might be, a bit less than that. But trading, it requires routine. It requires psychological strength, right? So everything you do in your day, in my opinion, should reflect, what you want to do in the market, right? Having self-discipline in every area of your life, that is only going to benefit your trading. So
it comes naturally once it's a part of everything.
Exactly. And you truly realize that the edge, as you mature as a trader, is your mentality, right? Sure. You could potentially switch strategies and still be profitable if you have the right mentality. So whether or not you have other income sources, whatever it might be, doing things to your best, right? Executing self-discipline throughout the day, working on your physical health, your spiritual health, your mental health, all those things come into play. Getting good sleep, sticking with a routine, preparing the night before, preparing pre-market, doing everything you can, reviewing your trades, back testing, again, like I said, I might only trade for an hour a day, but my lifestyle has become trading.
And I think that's a key component. It's one of the reasons that I asked that question, because without having talked about the answer before, I kind of know what that answer is for you, because that's what I hear from everybody who is in your position, where it's like, this is what I do for a living now. Exactly. So great stuff. Brandon, here in the chat, I just got to chime in here. Yes, it would. I've been searching for 51 years for that long lost wealthy relative, but I haven't found it yet, which means that I'm hoping that one day, maybe that'll be me for my long lost relatives a few generations down the line. So we're going to keep fighting the fight and doing what we're doing and trying to make it happen. Amish, thank you so much for spending some time with us today. We went a little over, which I'm kind of notorious for, because I just love doing this. I really could do this for hours and hours and hours, which is why I do the Forge Trader podcast. So check that out if you have not already done so. I've got a bunch of great interviews on there, as well as my philosophies and mindset and what brought me to the point where I am today as I continue to grow. And all of that said, I will try to get the date for episode 100. So I can share with you guys. And again, I'll try to do something special for that if I can. If you have not done so, go to theforgetrader.com/join for updates on everything Forge Trader. I love sharing my journey with you guys as well. Amish, obviously you do the same. Hey, by the way, where can we find you online? Speaking of.
So I don't have any courses. I don't have any mentorships, but I do have a Twitter account, an X account, APJ_capital. I'm posting some trades there, some P&L, some helpful resources. If you guys want to follow me, feel free. And I also have a YouTube linked on my Twitter where you can see my whole back testing sessions. You can see my strategy and stuff like that. And Gates, before I go, I just want to say thank you. You're providing a lot of value to the community, posting these live streams for free and posting your podcast. This is what it's all about, giving back. Trading is a very selfish business, right? We're extracting money from the market. We're not really providing value. So people like yourself who are really trying to help people, I really admire. So thank you.
Well, I appreciate that. And I can say the same of you putting up content for free and just encouraging and growing that community, I think is phenomenal. I think community and trading is one of the most critical aspects. So thank you for that as well, man. Well, listen, I can't wait to hear more updates from you as we get to know each other a little bit better and continue to chat a little bit more. For the rest of you guys, I love you. I appreciate you guys. I can't wait to see you next week on the next episode of the Trader Bacon Show. Thanks for joining the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Make sure to join us next time, Mondays at 11 a.m. Eastern.